July 8th, 2025. Remember that date. That's 89 days away from now. That is part of the 90-day window that we were just told about the tariffs about 24 hours ago, in response to the tariff situation that Trump had announced, placed tariffs all across the world. China has responded. We'll take a look at that. And then it was rescinded, paused for 90 days, and China was given its tariff as a higher amount, and then everybody else had that taken away and actually only have a 10% reciprocal amount. We'll take a look at this. In this video, we're going to analyze the tariffs for the 90-day window that we have to work with. Now that the tariffs are paused, what is going to be next? We're going to take a look at Bitcoin. We will take a look at the S&P 500. We will take a look at the DXY. And we will take a look at the 10-year bonds. Whether you are new to my channel or not, go ahead and click the like and subscribe button if you like my content thus far. In addition to that, I have a group called the Apex Trading Group. We currently have a private Discord, lots of signals involved, lots of videos. Arun bots is something that I specialize in. We have basically a bot service as well. We do private videos and much more. So go ahead and check that out. We're actually migrating to the Patreon method of doing this group. So go ahead and look forward to that. There's going to be a link in the description. Let's get started. For some of you that may not know, we had a pause on the tariff situation. It's really been a back and forth for the past 3 months. This is something that is not new. If you are in any sort of finance field, whether that's crypto, whether that's legacy, whatever, the thing that I have up on the screen here is relative to what President Trump has said himself. It says, based on the lack of respect that China has shown to the world's markets, I am raising the tariff the tariff change by China to 125% effective immediately. Based off the fact that 75 countries have called the representatives of the United States, including the Department of Commerce, Treasury, and so forth. Basically, this is one reason that we are doing this. And so he also says, and this is the big thing, he has authorized a 90-day pause for other tariffs, okay, particularly other ones of other countries, and a substantially lower reciprocal tariff during the period of 10% effective immediately. And so this is the key consideration in the matter is, so however you want to look at this, there's people that are trying to look at this as a big chess game. You even see here like people saying that Trump folded. Some people are disagreeing, like as you can see here, this is the plan all along. Some people are saying like the whole point of this was to kind of get China to just look the United States straight in the eye and deal with that matter. Okay, so that's something that tariffs and pausing aside, that's something that's kind of a higher level of what may or may not be going on. Okay, obviously there's a big situation. If you are not familiar with things in the U.S., we tend to be at odds with China from time to time for various reasons as well. And so I don't think that's any secret because I think China has some beef with other people. I'm not here to, pick our whatever, pick side, whatever that may be. That's not where I'm going. But where I am going is the idea that the tariffs are being paused for the time being, and we're going to have a 90-day pause. Well, what does that 90-day pause look like as far as the charts go? Because you and me and pretty much everybody that's watching this channel are much more interested in how the charts are going to be affected. Maybe you have a 401k. Maybe you're just trying to trade. Maybe, I know plenty of people that trade for basically their career. Successful day traders. That's how they manage to get by. More than manage to get by. They're doing pretty well. But we can take a look at the charts and we'll see what's going on relative to. Now, as I've mentioned, I kind of want to focus on Bitcoin. I want to focus on the S&P 500. I'm going to focus on the DXY, and I'm going to focus on the 10-year bonds. And so we're going to start with Bitcoin first here, basically because this is where I want to go first. This is more of my native area. I'm also familiar with stocks, of course, but most of you guys tune into my channel because of Bitcoin. So we're going to start with Bitcoin here first. And one thing you may have noticed already, so first of all, this is on the weekly time frame, but we're also this green marker here. This is the July 7th, July 8th marker. On the daily, it's actually July 8th. This is where that 90-day period is going to be marked at. Now, will this change before the 90 days? I absolutely think that it will. I absolutely think it will. I'm not gatekeeping with this. I do think it will. I think the 90-day window is just more of a placeholder. And it typically tends to be the case when you are trying to find a big enough window to, maybe get some feedback or maybe give response time for other countries. A 30-day window is a pretty sizable window to get everything that you need to communicate with other countries or to just get a situation resolved. Okay, this has happened more recently with the TikTok situation where they have tried to extend the ban. To prevent TikTok from being banned in the United States for 45 days. And that's basically kicking the can down the road situation. And this is kind of how this is. And so, what this also represents too is that this doesn't represent a guarantee that it's going to go away, and it doesn't represent a guarantee that it's going to continue either. It's just a pause. It's going to be a reevaluation. And what this is going to primarily tell other countries is like, okay, um, the United States is not folding, and the stance that he is taking on this. This is not something where he has folded. Okay. Now I do understand and I agree why some people would think that, but there's no guarantee here. And even if he did fold, he can come back or what have you. The whole tariff situation has been a complete back and forth. It looks like a mess for most people to deal with, but that's just part of the nature of what's going on. Okay. And so that's basically a reference to the 90-day window. Now, one of the reasons I want to focus on Bitcoin first is not just because it's my wheelhouse, but also because this is a risk asset. Okay. Out of the four of these, Bitcoin is going to be the highest risk asset. Okay. The bonds are going to be the least. And so one thing, I mean, I guess technically DXY is, but like one thing you want to work at with this is very reminiscent of the COVID drop, right? And so COVID was a time where people did not want to be at risk. That like it was a risky time, and now in retrospect it wasn't. But at the time, people did. There was a lot of uncertainties going on. But what happened with Bitcoin after that? Bitcoin went up pretty significantly, and this is an example here where let's say here's your price range. Here was your drop here from top to bottom. It went about 800%, a little over 800%. And so that's something to keep in mind. Now, obviously, this doesn't look that great from the monthly standpoint, but you don't know what's going to happen here. The whole point is Bitcoin is a very elephant in the room is when it comes to risk assets because people like to invest in Bitcoin. The more data that comes out now that Bitcoin is becoming older and older as we go, people are starting to gain interest in buying Bitcoin when things get riskier, okay, for some reason. And so the data still needs to be worked out over time. That might take 10, 15 more years to figure that out, to be solidified in that. But that's kind of what that looks like. Now, what do I think is going to happen? Now, I'll be the first to say I do not know what's going to happen. But I'm going to look at this from a 3-day window here. Gives me the best perspective here. You have a very nice clean upside here. Here's my swing high order block. And so, a swing high, you guys may not know. Let's see here if I can add this. Swing high order block. And so what that means is you're just looking at an order block from a wick perspective from the highs of that zone. What you can do is you can use this as sort of a support for a wick based support, and in my experience, this tends to be a pretty valid way of thinking. Now, you've gotten pretty close to this to the $74,000 range. This is a range that I find very high interest in, and we also have a bullish divergence here as well. So this is a key area for me. So what I think that's going to happen if we zoom just in here for the daily is that we have this trend line resistance. Okay, so I'm just thinking about the next 7 days. Trend line resistance, I think we're going to fade here till the end of the week. Okay, we have a few more days left. We have almost 4 days left, just under 4 days. So I think that we are going to fade here, go back to maybe the mid to upper 70s, and then rally back into the 80,000 marker after that. Okay, and so once we cross this zone, I think that we can kind of skid down this trend line here, and I think it might take a little bit of time to get out of there. I think it might take anywhere between um, you know like 7 to 10 days basically. But after that, I do think that we are going to rally here. Okay, I think that this is going to give a much needed relief rally. And whether you think that we should or we shouldn't, that tends to be the case with the ebb and flows of the market. Now, as we get to the 45-day marker with the tariff situation, assuming that things are going to stay the same, okay, your 45 marker is going to be right here. Okay, so I'm going to mark this out too. This is where things will get a little more risk. If we don't hear anything, you will more than likely get a sell off. Okay, because you're gonna have that uncertainty in the markets, and so I think a good key level matching this here is going to be right here. So I think that we can get a touch up here to about 71,000, almost, or not 71, 91,000, 92,000, and roughly by the end of by the middle of May. Okay, somewhere around this. Let's see if I can mark this properly. I'll just do this here. I'd say right around here is where I'm looking at for a window to work with. Okay, that's the area that I'm looking at. That we could slide down here. We could rally back up. I think we'll slide down here first, get the pump, and then go back up. Okay, and so from that current position, or from the current market position right now, that's going to be about 13%. And then after that, I think we're going to get some uncertainty and possibly head back down. I think that's to be determined, but I think at least we have a good context for the first 45-day window. Now, this is going to be for Bitcoin. It's going to be looking a lot different from other places. The Bitcoin dominance chart, if I could go there just briefly, gives us another window with this as well. The Bitcoin dominance keeps going up. For those of you that may not know, as the dominance keeps going up, the markets are going to tend to go down. So I would not be surprised if we see a downside rally here pretty soon, where we retag here at 62. Okay, and so I think this is going to work in tandem. If we go back down and reload, that's going to work out with this Bitcoin chart here. So that's kind of the window I'm looking at for that. So that is Bitcoin. But let's go ahead and check the stocks and see. We'll go there next and just see how this may look for the stock market. So here is the S&P 500 in regards to this. So there's a few things I want to take a look at. First of all, here's your two levels. Here's your 45 level, which I'm going to just as red, and then the 90-day one as green. And so there's no reason for that color coding. I've just decided to do that. And so one thing we can see here is we had a drop here. We had a pretty good recovery. This is the biggest recovery ever in the stock market, actually. Now, for most people, that doesn't seem to be a big deal, because, including myself, because we had the biggest drop last week as well. So, and also this candle is not done yet. Okay, we still have, about 48 hours or about 2 more trading days here in the stock market. I should say not 48 hours, but 2 trading days here. Now, one thing that I want to know is this is a really solid weekly block here, and so far we're recovering. So if we can hold this at 52.60 for the end of the week, I think this is a good, and I think this is going to solidify a recovery for the next 45 days, the first 45 days, I should say. And then after that, I think that we can come back down. So we're going to see here. I think we could look at somewhere around here as a window of retest. So I would not be surprised if we kind of just V shape all the way to 57.30, and then we come back down again. I think for both Bitcoin and the stocks, I think for the second 45-day period, I think that will be either a drop or it's just going to be not worth its R&R. I think we're going to stall because we're going to wait for his response. And this does assume that we do not get a response for the first 45 days. If we do get a response, that's going to change things significantly. But we are going to work with this as we see it. The tariffs are paused until they are decided to be unpaused. If they're taken away, I think that's going to help the market even further. But the longer they stay paused and there's no action, or at least there's some sort of threat of maintaining that action, right? Then the market's going to stall. So that's kind of what I'm looking at for both categories, honestly. Another thing I'm looking at, if you want to zoom out here, is that from a lot of people really don't seem to trust the RSI. And so, but one thing I find a lot of opportunity in is navigating this. So if you draw a horizontal line here, which is I got this in bright red just to make it much more noticeable. It's about 27 here on the RSI. And so in most cases, once we bounce to that 27 marker, that has been the bottom. Okay, that was the COVID bottom as well. You have to go back pretty far, honestly. Now this isn't foolproof, right? So this is the one here, back in 2008, 2009. You guys know where this one was. This one ended up being much more farther than that. Okay, so in order for the RSI to invalidate on this, you need to compare this to the financial crash of 2008. Okay, and in my opinion, I don't think that we're here yet. I don't think. Now, could we get here? I think that remains to be seen, but I still think the market looks healthy enough to where that's not necessarily going to be a problem. Okay, and so um, this looks much more different. We did not reclaim all of this. Okay, this is already this is an engulfing on the 1 day uh, by multiple candles. So this is behaving just a little bit differently. You also have the ARN, as I've looked at this, much in a much different scenario. That's about 85 on that one, and this one was a lower cross here. This one crossed much more earlier, dropped here, and is crossed a little bit after that. So there's different behaviors for this, but as far as this goes for the first 45 days, very similar to Bitcoin in my opinion. Going to get that push up to that 57 and a half marker, and then we're going to look at that maybe stalling for the next 45 days. So that is the S&P 500. Let's go ahead and look at DXY. So next up on our list is DXY, and so many of you, as you probably know, is part of the dollar index. This helps us understand uh, the strength of the dollar that we have, and this is very important because it's relative to the tariffs. Tariffs are going to be measured most often than not, relative to the United States is going to be relative to the dollar. And so whether that is a percentage tariff or whether that is a ad-based tariff or a certain type of fee, the U.S. dollar index is going to be pivotal in that. It's going to be a focal point of pretty much any asset, even Bitcoin, even stocks. Okay, and so that's one reason why we need to put this in context too, because as this goes up, the dollar can also, or the Bitcoin value can also change as well. We can see here that the top here was very similar to a level that we had on Bitcoin here. So this is roughly about the end of September, early October. That's basically where Bitcoin actually rallied to the upside. So that is something to keep in mind. So typically there is an inverse action there with the dollar index. So what we can see here is that you have a consolidation here. You had a little bit of uptrend, then you had a drop down. So in retrospect to this, like, you don't necessarily like you always want a strong dollar, right? As far as the economy goes, whatever your currency is, you want that currency to be strong, right? And you don't want it to be weak, obviously, and you don't want it to kind of fluctuate too much either. So the more stable this is, it ends up being the best option for, the economy, for trades and goods and services, things like that, because this helps represent stability. This is a very good example here from the 2015 to like 2000, almost about the mid of 2017. A very good marker here, consolidation. So we have pretty much something similar, not quite. It's more retrospective, right here. Okay, and that gives us a little bit of a somewhat stable outlook on the dollar that we've had for about 2 years now, despite the fact that there's been a lot of inflation. Now, the reason why there was inflation the DXY does not have to be impacted by inflation in that same aspect. Okay, the DXY does not have to go up or down because of inflation. In this case, inflation does tend to be based off of other factors. Not always, but a lot of times it is. And so things have gotten out of hand. That's more relative to like supply and demand. That's the recent example would be the whole egg situation, how the egg prices were going up, and that was used as an inflation based narrative. Whether you believe that was true or not, that was what was weaponized. Okay, most recently, and so that's something to keep in mind. Now, the dollar value has gone down since Trump took office, and so this is basically right around here, I'd say. And so pretty much, yeah, so we've gone down about 5, almost 6% here since then. And so that's something definitely to keep in mind as well. But one thing I want to look at here is you have this consolidation marker. We kind of hit the mid level on this. So if we can go back down to about 99, I still think this is going to be relatively in the safe zone. I don't quite like the deviation that came above this. This whole deviation point was a sign that we were going to come back down completely, probably to like 99 to 100. Okay, and so that's still within a realm of being healthy. I get in some aspect. You can see that we went down to like the 90 range back during the COVID era, and then we actually rallied from there. Okay, and that was quite what a lot of people didn't expect at the time. We also saw this here in 2014. Another aspect here with 2008, 2009, this also rallied as well. And so, as you can see, this does tend to happen when there tends to be a crisis of some sort. Like once the crisis is over, the DXY does tend to rally hard pretty well. And so, something to keep in mind with that. I actually like to look at DXY from the 2 week chart because it gives me a much better window to look at things, right? And so one thing I look at from the 2000 marker here, we went pretty significantly low on this. I'm going to mark this down from the COVID low. And so I promise I'm not cherry picking this, but this is roughly about 30%. Okay. And the last time we went down that low was, again, 2008. And we did this roughly about the 2002. That was like the whole, Iraq thing or whatever. So those are all reminiscent. And as you can see, the dollar was very, very, very strong up at that point. And I think it was. Oh no, it wasn't this strong. We had, back in the early '80s. The '80s was a good time as far as the dollar value, actually. So except for mortgage rates, those are pretty high. But you can see that the dollar value has gone down pretty significantly, um, really for the past 40 years. This really marks the 40th year, 1985. So to keep that in mind, like our entire dollar value has lost a pretty good amount. And even from the top here, we've lost about 80% of our value over time. So about 1% per year, and that's also working against us because of the inflation as well. Inflation typically is about 2% per year. For the past 10 years, it's been about 4%. Really, for the past 5 or 6 years, it's been about 4%. So it's kind of doubled. Hyperinflation, I do believe, is going to continue to come. I'm not sure how the tariff thing is going to um, work out with that. I think that's unfortunately a separate discussion because that's more of a topic for inflation. But as far as the DXY goes here, we're still kind of working with this window. I think we're going to go back down to 99. Okay, I don't think we shouldn't really go any lower than that. Really, this level is the biggest level I'm looking at here. And so we'll probably get down to that. I think we could go as low as 99.3. We might go lower and then recover that very quickly. That's an option as well. But I'm not necessarily looking at this too strongly either way. I think this is kind of where I want this to be. And I also think this is a good evidence to why I don't think we're getting that recession that a lot of people wanting to. A lot of people want this Big Short 2.0, and I really just don't think that we're going to get it. I just don't think that we're going to get it. Okay, the markets are already reacting positively to some of these things. Now, as far as that 90-day window is concerned, I mean, we can kind of look at that, I guess. Now, I'd say was it July 8th was that window here. And so you already have a divergence of some sort here. I think this is easier to see on like a 3-day window. Okay, and so no, that's not a divergence. I thought there was. Maybe it's 2-day. And so yeah, this is right here. So I do think that we're still going to V shape and maybe get to about, we could get to like 105. Okay, and so maybe that 99 percentile may come after that window appears. So either way, I think no, whichever comes first, the other one's going to come next. So I'm not really anticipating which order that's going to be, because I don't think it matters anyway, because whether it goes up, down, or down, up, it's still going to be relatively the same wavelength. And so you're going to have the same median regardless. And that basically makes me think the dollar's not going to be strong or weak. It's just going to be how it is. Because right now, tariffs are mainly focused on the trade goods, the exchange, methods of exchange, and things like that. So so what's really going to be affected is things like oil and bonds and other things like that, instead of the actual dollar value. I don't think anybody's actually interested in the dollar value right now. I mean, of course, that's always going to be on the table, but that's not a priority right now like it was during COVID. So for my best guess here is I think that we're going to stall on the DXY for the next 90 days, at least for the next 45 days. And again, I think that points to not having a recession. So that is the DXY. Let's go ahead and check out the bonds. That's going to be the last one in regards to this tariff situation. So we are going to take a look at the U.S. bonds for the 10-year. As you can see here, this is not an audio clip. This is what the bonds look like, really, ever since the year 2000. So as you can see, there's not a lot of window to work with. This looks very similar to like maybe a stable coin of some sort, and this is by design. If the bonds go too low, then there's a lack of trust. If it goes too high, then there's other things at bay too. So the whole point of bonds is for it to be stable. Now this is a 10-year bond, so you got to keep in mind there's 2-year, there's other frames of reference for those bonds, but this is going to be the 10-year one. And so one thing that we can see over the course of the past 5 years is that we went all the way down to, the 89 marker here. And it's kind of rallied ever since then. I'm not trying to do TA on this. I'm not saying this is going to break out, because honestly, it's never been higher than 113 ever, and it's also gone lower as well. And I think that obviously this is by design. That's kind of how the bonds work. But the whole point of this is to keep it stable, okay? And so that also brings stability to the markets. Bonds are incredibly important for the markets to continue in a healthy manner, okay? So you have that working with you. So I don't really think anything's going to happen here on a high time frame, especially 90 days, because 90 days for high time frame is really not that high anyway. Now, if we go down to the 1-day marker here, we have a few different things going on here, but the biggest thing I see here is this gap, okay? And so this is something that we looked at from this is way back in about mid-February here, and we already had the drop down here. A lot of people were anticipating that the bonds would go up if the tariff situation would be changed, and since the pause, that tends to be the case. We dropped down relatively significantly. Like, the whole idea is this doesn't go down much at all. 1% or a little bit more than that's going to be a big deal for the bonds. But this has actually gone up, and so to be honest with you, I just think it's going to come back down eventually. I don't think it's going to be a big deal either way, but I think we're going to go back to that 99 marker. So, and this one's not necessarily going to be relative to time as well. Now, the good news is we're pretty close to it anyway. We actually were pretty close to it yesterday. So I don't think this is going to be a big ask, especially when you're looking at 10-year, because, again, the whole point of this is that you're waiting 10 years, right? So I think a few days here isn't going to particularly matter. But I also think this is overall a good sign here. I don't see, the whole aspect as far as the tariff situation is, a lot of people are panicking. A lot of people are fearful. A lot of people are thinking recession, doom and gloom. My 401k is done. All these things, et cetera, et cetera, et cetera. And I just don't think it's going to happen. I don't think the data points to that way. to that. As far as the bonds go, it's going to be stable. We already kind of know that. We just talked about the DXY with this. Okay, I don't think this is going to go very far either. Even on something like the weekly or even the monthly here, this is a very clean range to work with here. Nothing's really going to happen in the next 30 days, in my opinion. The DXY again is not going to be a priority. It's not. It's more in regards to other factors besides the trade goods. Okay, as far as a higher priority. If you go to the S&P 500, we talked about this as well. A lot of people think that we're going to get like the recession drop. So let's just say that we do, okay? And we go down here to like upper 3000s. That's going to be a recovered thing by the end of this year, okay? I can I can almost guarantee that. I can't guarantee that. But even if we get a much more serious drop, that's going to V shape pretty quickly here. And so but again, the data, in my opinion, does not point to that. The data, from what I see, points to the current bottom being this week. Okay, so we can take a look and we can wait and see, I guess. But I don't have any significant data to think that things are going to get super chaotic. Things could go lower. Yes, Do I think the worst is over? Yes, I do. And the data seems to point that out. And so, and then going back to Bitcoin, and even if the market goes down, a lot of people are going to be focusing on Bitcoin to have as a risk asset. Okay, the people are okay buying a risk asset like Bitcoin, because it doesn't necessarily represent risk anymore. It represents a store of value. It represents a hedge against inflation and things like that. So we'll see how that goes. But that is the tariff video. I hope that explained a few things for you. Let me know what you think. Comment in the comments section. Let me know what you think. Do you like this video? Do you want more of these? Go ahead and check the link in the description for my Apex trading group, and I'll see you next time. Thank you.